Afternoon and happy Thursday, everyone. This is Scott Wohlers with River Place Capital. It is Thursday, December the 19th. I'm going to take just a brief minute to discuss what markets did last week, as it was a down week in the equity markets. Not too bad on the S&P 500, as that index was only down 64 basis points, or down 0.64%. The mid-cap index was down 1.63% on the week, and the small caps were down the worst, just a little bit worse, down 1.7% on the week. And flat week going into this week, all eyes were going to be on the Fed for this week's meeting, which was yesterday on Wednesday. And what they were looking at is not necessarily the rate cut that was expected, and the Fed did cut rates by 25 basis points yesterday in their meeting, but it was going to be more on the commentary, and they released what is called the dot plot. The dot plot is where the Fed bank presidents all chart where they foresee interest rates being over the next several years, including next year. And so what you saw is only the majority of Fed bank presidents seeing 2 rate cuts next year. And then during the Q&A section after the meeting minutes were released, you had Fed Chair Jay Powell signal that they were going to be more cautious on rate hikes, as they've seen that inflation has indeed remained sticky. Now, if you'll remember back to about 6, 7, 8 months ago, that when we were talking about inflation and it coming down and things along those lines, we felt that it was going to be very challenging to get from 2.5 all the way down to 2. And that, in fact, is what we're seeing, as we are stuck a couple percentage points above and below 2.5% on CPI year over year, and that's what we're seeing in the inflation report. So the Fed chair is signaling that he wants to be more neutral, and that was seen as more hawkish. But the markets were pricing in ahead of this meeting everything going right, so the bias was going to be on the downside, and the market was looking for something and an excuse to sell off all of the good news and all of everything that had been priced into the market. So you saw quite a violent reaction to the news yesterday, as the markets were actually up to start the day yesterday on Wednesday, but finished the day down roughly 3% on the S&P 500, not quite as bad on the Dow, and the NASDAQ was down about 3.5%. The small caps were down over 4% on the day. Now, we still had wonderful year-to-date returns in all these equity indexes, but as we move forward past this, we are going to be in a period where we're not getting any corporate earnings. We still don't know the policies and the impact of the policies of the new administration, what those are going to lie. So we have this time where there's going to be the opportunity for volatility to take over the market. We've been warning you about that for at least for the last couple of weeks, and telling you that this is coming. So now it's a good opportunity for you to look back and take an opportunity of this volatility. If you've built a cash reserve, continue to watch the market, continue to see. We still see that there's some opportunity for downward bias before we see the opportunity to really see some upward potential in the markets. So if you have some extra cash and dry powder, continue to build your list and your bench of names that you want to take advantage of. If you've had some names that were some of your losers, as I was talking about last week in tax law selling, I wanted to touch briefly on that. If you have names that have not performed this year, why you may still continue to see downward pressure is portfolio managers will look to offset any gains they've generated throughout the year by selling stocks that are negative year to date or negative in their portfolio. And that's why you're seeing what we call tax loss selling this time of year. Is it's December and they're trying to reduce the tax burden for their clients, so you're seeing those being sold off, and you're seeing a downward pressure on those names. Continue to see that more than likely for the next week or so in the markets. But if you have questions about how to navigate this volatile time, we'd love the opportunity to speak to you. You can reach us at 904-346-3460. As always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.